Hello everyone, my name is Charater and I have Lovena and Vanessa as my teammates. We are from Petra Christian University and shout out to Mrs. Vituri, our mentor. It's an honor to be a participant of Teams 2020. Our topic is tax avoidance and investment efficiency. Can competition in product market mediate? But before we start, let me explain it to you what is tax. Tax is a mandatory contribution that must be paid by the taxpayer like individuals or company to the country. But not everyone want to pay their tax and some people want to pay as minimum as possible. Is there a way to reduce your tax? Yes, there is, by using the tax avoidance. Next. Tax avoidance is a legal way to reduce your tax by using the loopholes in the tax regulation. This scheme is very common in the eyes of company, but what is the benefits? First, you can reduce your company spending when the company going through intense competition. Second, increase the investment efficiency. Third, financing company investment. Next. The next subject is investment efficiency. Investment is an act to allocate money or assets in the expectation to bring benefit in the future. How to maintain it sustainable? The company manager must pay attention to the environment and create the best investment plan. Investment without a proper plan can lead to under or over investment. The next slide will be explained by Lavena.
The next is product market competition. Competition is multidimensional construction that comes from companies in an industry and potential entrants. This competition happens because of several factors, such as the threats from newcomers, threats from the existence of substituted goods, bargaining power of supplier, bargaining of customer, and competitors in the business. Aside from competition between companies in an industry, companies have to encounter the competition from potential new entrants. The threat from new entrants put tension on price, so the existing firms must retain their profit or increase investment to constrain new firms from entering the industry. The threat from new entrants depends on the barricades or cost of entering the market. Sooner or later, the new entrants will lead the market if the existing firms do not do anything to survive during this competition. Companies that are in a highly competitive environment tend not to waste their resources. Besides, companies that are unable to compete in a competitive market will go through bankruptcy. Prior research also explained that permanent competition indirectly affects risk-taking because the result of management decisions are more closely observed. Monitoring the manager is very important to prevent free cash flow investment under the cost of capital. Next. We have two hypotheses in our study. The first hypothesis is tax avoidance has a positive effect on investment in efficiency. And then the second hypothesis is permanent competition becomes a mediating relationship between tax avoidance and investment in efficiency. Next. For this research, we use a sample of public listed non-financial companies in Indonesia that are listed on the Indonesia Stock Exchange from 2014 to 2018. The sample of companies in Indonesia consists of 7 business sectors, such as agriculture, basic industry and chemical, consumer goods industry, infrastructure, utilities and transportation, mining, property real estate and building construction, trade fees and investment, and miscellaneous industry. All data for measuring the variable were obtained from Bloomberg. There are 394 companies based on the sector Indonesia, but we only use companies that have a positive value of ATR, sales growth, and market share. For the next slide will be explained by Vanessa.
Next slide is about method. We are using SPSS program to do the regression and WAR PLS program to run all the data. The proxy that we use for tax avoidance is effective tax rate, or as known as ETR. Effective tax rate is calculated using the formula for total tax expense divided by income before tax. We use this measure to capture the various goals that managers may have in terms of tax avoidance. The greater ATR value, the smaller level of tax avoidance by the company. For investment efficiency, we are using the residual as a proxy. The residual is used to see whether there is a deviation from investment or not. Investment efficiency occurs when there is no deviation from the expected investment. Companies that invest above optimal will tend to overinvest. Otherwise, companies that do not carry out all profitable projects will become underinvest. The last, product market competition use Herfindahl-Hirschman index as measurement tool. The formula is summing the squares of the market share of each company in the industry. The next slide, we get a result that tax avoidance has a negative effect on investment efficiency, which means tax avoidance has a positive effect on investment inefficiency. Also, the product market competition does not mediate the relationship between tax avoidance and investment efficiency. The next slide is about our analysis and discussion. We can conclude that our first hypothesis is proven. It can be seen from the model before that tax avoidance has a negative effect on investment efficiency. The negative impact can be seen through the value of PAT coefficient that is negative. Therefore, a higher tax avoidance will lead to a higher investment inefficiency. We also can conclude that the cash saving from tax avoidance is not efficiently used by the companies. Next, our second hypothesis is not proven, and it means product market competition is not mediating the relationship between tax avoidance and investment efficiency. Prior literature said that industry classification and sample period can significantly affect the performance of industry portfolio. A higher concentration market leads to a lower competition in the market. We conclude that lower competition makes product market competition is not significant enough to be a mediating variable between the relationship of tax avoidance and investment efficiency. That is the end of our presentation. Thank you for your attention.